Hello, everyone. Welcome to the market opening bell on Wednesday, September 24th, your 10-minute guide to the stock market. Super Typhoon Ragasa is approaching Hong Kong, but the Hong Kong Stock Exchange confirms trading will proceed as normal. Affected by bearish sentiment in A-shares and the one-month high in the one-month HIBOR at 3.91%, Hong Kong stocks rose initially but later retreated on Tuesday. The Hang Seng Index opened 91 points higher, briefly climbing 109 points to 26,454, but then fell, dropping 340 points in the afternoon to a low of 26,003, closing down 185 points or 0.7% at 26,159. The H-share index fell 80 points or 0.9% to 9,290, and the Hang Seng Tech Index dropped 90 points or 1.5% to 6,167. Total market turnover was 294.5 billion Hong Kong dollars. Southbound trading turnover reached 149.5 billion dollars, with southbound funds shifting to a net outflow of 4.069 billion compared to a net inflow of 12.736 billion the previous day. Among them, net buys include Alibaba 1.673 billion, SMIC 502 million, Ecoso 219 million, Shanghai Dazhong Public Utilities 119 million, XLPI 158 million. Net sales include Tracker Fund 3.271 billion, HSCEI ETF 993 million, PopMart 374 million, Hua Hong Semiconductor 233 million, Tencent 222 million. Statistics show southbound funds have net bought Alibaba for 23 consecutive days, totaling $62.114 billion. Technically, the Hang Seng Index fell below the key 26,200 level, hitting a low of 26,003, suggesting the correction may continue. If 26,000 is reached, support at 25,700 will be tested. Asia's three major indexes opened high but fell in the morning, gradually recovering in the afternoon. The Shanghai Composite closed at 3,821, down 6 points or 0.2%. The Shenzhen Component closed at 13,119, down 38 points or 0.3%. The Chinex index rose 6 points or 0.2% to 3,114. Total turnover in Shanghai and Shenzhen was 2.49 trillion yuan. The renminbi central parity rate was raised by 49 points to 7.1057 to $1. Reports indicate China's securities regulator has advised some local brokers to suspend real-world asset (RWA) tokenization in Hong Kong, reflecting caution toward the booming digital asset trend. Guotai Junan International plunged over 11%. RWA tokenization converts traditional assets like stocks, bonds, funds, or real estate into tradable digital tokens on the blockchain. Several Chinese brokers have launched such products in Hong Kong recently, but at least two have received informal guidance from the CSRC to halt offshore RWA activities. The duration of the suspension remains unclear. Alibaba cross-border e-commerce platform AliExpress launched the Super Brand Global Plan, recruiting well-known brands from Tmall and Amazon to enter markets at half of Amazon's cost, seen as a challenge to Amazon for mid to high-end markets. AliExpress aims to attract brands with lower shipping fees and commissions, boosting sales in key markets like Europe and Latin America. For consumers, AliExpress will launch a Brand Plus channel with authenticity certification, free shipping, and price guarantees to build trust. For merchants, a brand service center offers real-time data updates, channel conversion analysis, and audience retention tools for refined operations. Marketing-wise, AliExpress leverages localized capabilities to connect brands with local consumers, while its overseas hosting services now cover nearly 30 countries. A suite of AI tools supports brands from selecting trending products to automated store design, advertising, real-time marketing, and feedback analysis. Additionally, Alibaba's AMAP announced free one-year entry fees for all catering businesses nationwide, offering traffic subsidies, dedicated customer service, and smart cashier systems. Xiaomi will hold a global product launch tomorrow evening, unveiling the Xiaomi 17 series. Xiaomi's chairman and CEO Lei Jun will deliver his sixth annual speech themed change, discussing the stories behind Xiaomi's Xuan Jie chip and Xiaomi Auto. Lei explained the speech was delayed from June, originally planned with the Xiaomi YU7 launch, due to the latter's extensive content. Federal Reserve Chair Powell noted high stock market valuations, prompting a decline in U.S. indexes. The Dow briefly rose 332 points to a record 46,714, but closed down 88 points or 0.2% at 46,292. The S&P 500 hit the high of 6,699, but closed at 6,656, down 36 points or 0.6%, ending a three-day rally. The Nasdaq fell 215 points or 1% to 22,573. The Nasdaq Golden Dragon China Index dropped 190 points or 2.2% to 8,391. Cathie Wood's ARK Investment Management resumed investing in Alibaba after 4 years, with two ETFs buying Alibaba ADRs worth $16.3 million on Monday. Alibaba's ADR hit its highest level since November 2021 on Tuesday. AI and tech stocks fell. OpenAI announced a partnership with Oracle and SoftBank for the Stargate project, investing $400 billion in 5 new US data centers. Doubts about Nvidia's $100 billion investment in OpenAI, hinting at further pressure and at funding pressures, led to a 2.8% drop in Nvidia stock, while Oracle fell over 4%. Amazon dropped about 3% and Tesla fell about 2%. Boeing and Palantir Technologies announced a collaboration to accelerate AI adoption in Boeing's defense, space, and security division, with their stocks rising 2% and 1.8% respectively. Disney raised its ad-free Disney Plus subscription by $3 to $19 per month, and its ad-supported plan by $2 to $12 per month, effective October 21st. This follows a 25% price hike last year. Disney stock fell 0.3%. Micron Technology reported Q4 revenue ending August 28th at up 46% year-on-year to $11.32 billion, slightly above the $11.22 billion expected. Net profit rose 2.6 times to $3.2 billion, with adjusted EPS at $3.03, beating estimates of $2.86. Micron forecast Q1 revenue at $12.5 billion, above the $11.94 billion expected. Its stock rose 3% after hours. On economic data, the U.S. current account deficit in Q2 fell 42.9% to $251.3 billion from a record $439.8 billion, aligning with expectations of about $250 billion, driven by reduced goods deficit from $465.8 billion to $270 billion, reflecting lower imports after tariff avoidance purchases. The OECD raised its 2025 global growth forecast to 3.2% from 2.9%, maintaining 2026 at 2.9%. US growth is projected at 1.8% for 2025 and 1.6% for 2026. Eurozone at 1.2% and 1%, China at 4.9% and 4.4%. G20 inflation is expected at 3.4% for 2025 and 2.9% for 2026, with core inflation at 2.6% and 2.5%. The OECD warned of resurging inflation pressures with slowing disinflation, rising commodity prices, and persistent services inflation. Our stock pick today is Cloud Factory, stock code 2512. Cloud Factory primarily provides Internet Data Center (IDC) solutions, edge computing services, and other services, having been recognized as one of China's top 20 edge computing companies for 3 consecutive years. In the first half of 2025, the group expanded its focus from building edge computing infrastructure to developing scenario-based edge computing applications and deep integration with various industries, aligning with the industry trend of integrating edge computing with AI. The group strengthened its core strategy of edge cloud plus AI services and deployed nodes nationwide, creating a 10-kilometer low latency computing service circle that covers over 2,000 counties in China, supporting localized computing power and achieving computing network integration. Leveraging its computing power, scheduling platform, model fine-tuning platform, and AI large-scale model applications, the group is building a comprehensive technology stack covering diverse model capabilities at the model as a service layer and deep industry scenario integration at the software as a service layer. Its strategic focus is to anchor itself in the computing power network while deeply engaging in intelligence scenarios, providing real-time fast response edge AI solutions for sectors such as government, transportation, and education, and transitioning toward an edge intelligence foundation to empower intelligent upgrades across industries. In the first half of 2025, the group successfully launched several new services. The Edge AI Station service completed adaptations for multiple mainstream AI models on its computing platform. With stable infrastructure and a global node network, the group can now provide reliable and secure computing services to meet market demands. Additionally, it launched the Lingjing Cloud Large Model Private Deployment Solution, offering various AI models, application platforms, and private deployment solutions for computing clusters, enabling enterprise clients to build proprietary knowledge bases, utilize model fine-tuning services, and benefit from secure, flexible, and efficient AI solutions integrated into the group's products. Furthermore, the group officially launched a computing power scheduling solution, a one-stop platform managing diverse computing resources, including GPUs, NPUs, and FPGAs, with features like mirroring and snapshots to simplify client operations. The group's efforts have earned recognition from clients and prominent institutions, with collaborations in the first half of 2025 with the Robotics Industry Alliance, renowned universities, and leading enterprises, providing support for edge computing, AI large model development, and computing related services. Looking ahead, the group will prioritize several key areas. One, new business expansion, intelligent computing services, including hardware consulting, server deployment, network enhancement, intelligent computing platform construction, equipment procurement and installation, technical support and maintenance, and cloud computing and computing resource leasing services. Two, technology R&D, building a full stack technology system from infrastructure as a service to software as a service, supported by self-developed computing power scheduling platforms, model fine-tuning platforms, and AI large model applications, achieving cloud edge device collaboration. Three, ecosystem collaboration, co-building a comprehensive ecosystem connecting hardware, platforms, and applications. Four, government enterprise geo-driven business model, strengthening partnerships with government and enterprise clients. Recommendation buy at 4 0.8 Hong Kong dollars. Target price $5.3. Stop loss at $4.55. I do not hold any shares in the mentioned stock.